Well, let's get some more of this now, on this now from Wei Gu from the Wall Street Journal in Hong Kong. Wei Gu, thanks very much for joining us. We've heard lots of different opinions about what caused this. One line of thinking is that it may have been that revaluation of the yuan. What's your thought?
I totally agree. I think the abrupt change last year in August has made people quite nervous. When I was in Shanghai last week, all I hear from people is they think the biggest risk of this year is going to be yuan's continued devaluation. And people are saying that as soon as January 1st starts, when they're allowed to transfer 50,000 US dollars, they are going to do that. So that means two things. One is there will be money flowing out of China, and the stock market will be one of the places where people draw money from. Another reason is people are getting nervous about the government's ability or willingness to keep the yuan or the stock market at a stable level.
And we know this was a real baptism of fire. These circuit breakers had only recently been introduced. What motivated the government to bring these circuit breakers in?
Last year, there were a lot of times, 33 times actually, when the whole market fell more than 5%. And there were 11 times when the whole market fell more than 7%. So that has triggered a sequence of chain reactions. Last year, there was lots of leverage in place. So when the market fell that much, brokerage firms were scrambling to sell positions so they can get their margin calls. So that's one trigger. And I think that the circuit breaker is in for the right reason. So yesterday, we didn't really see so much of the triggering the margin loan-based sales. So that's good. But that's a new thing. So that may have led to some confusion. And it's really rare for a country to introduce a circuit breaker and for it to fall that much on the first day.
And Wei, we heard in one of our earlier reports that some of this panic may have been exacerbated by these millions and millions of retail investors across China. Do you think they really understand the complexity of something like a circuit breaker and really understand what is going on in the markets?
Well, the circuit breaker was introduced pretty quickly, so it didn't really give people too much time to think about it. As we heard earlier in the news, there were some retail investors who were confused about it. But I also wouldn't completely blame the retail investors on that. A lot of the retail investors in China are actually very sophisticated. They have been through really hard times. Many of them have been trading for more than 15 years. So when you talk to them, you realize they actually understand a lot. And it's the fund managers, traditionally institutional investors, who are actually very young in China. The average age is something about 30 years old. So if you want to bring the retail investors, a lot of them are actually quite veteran players. You can also blame the institutionals for being young and inexperienced.
Yeah, I'm sure they'll have learned an awful lot from this. The Shanghai market rose nearly 10% in 2015, despite all that volatility we saw across the year. How do you think things will pan out now, given that we had this very dramatic sell-off on the first day of the new year?
Things are going to be harder this year. First, the economy is not really improving and people are losing confidence. And then we have lots of new supply coming up. So this year, there's going to be the changing of the IPO system into a registration-based system, which will make it easier. And currently, there are 700 companies in the pipeline, and they're going to raise money, and that will be multiple times of the total amount raised through IPOs last year. Also, Shanghai is going to introduce a new strategic board, which will be a place for the US-listed Chinese companies to return to. So that will also increase supply a lot. So you have the supply increase, and you have the liquidity, and some people were disappointed yesterday that the government didn't loosen the monetary policy further because they have to strike a hard balance between the currency and domestic stimulus. So if the government's hands are tied in terms of how much they can stimulate, and in the meantime, they're increasing supply of total stocks, that's going to weigh on the overall market.
Wei Gu in Hong Kong, many thanks indeed for your analysis. We appreciate it.